Welcome to Power Charting. I'm Bruce Frazier, your host. We have a most special episode today with our very own Roman Bogomazov, where we are going to do a tape reading techniques workshop. And this is such an important skill set, largely forgotten, practiced by a few, mostly Wyckofians. And it is just a thrill to be able to have this workshop today with Rahman. Rahman, thank you for being here.
Well, Bruce, as always, I'm always happy to be here with your audience of the power charging, and I'm looking forward to this session.
I have in my hot little hands How I Trade and Invest in Stocks and Bonds by Richard D. Wyckoff. And
Mhm.
this is a 1926 edition of that book. So it comes right out of the era and it's wonderful. And I'm looking at a photo of Jesse Livermore. And Jesse Livermore, who was a peer of Richard D. Wyckoff, and Richard D. Wyckoff is one of the very few people that was able to go into Jesse Livermore's Midtown offices where he did his trading. And I have this wonderful portrait of Jesse Livermore holding the tape coming out of the tape machine, which you can see here on the screen. And he's standing there holding it, getting ready to study it. It's a painting actually. So today, Roman Bogomazov is going to be uh, our Richard D. Wyckoff, Jesse Livermore educator and talk to us about tape reading. So with this, Roman, you have a very special three-part series coming up on tape reading, and this is a rare opportunity for people. Tell us about it.
Well, I am extremely excited that we put this series and this course together. It's 10 sessions. We're going to have four tape readers, teachers that actually, on a daily basis, all they do is just to look at the tape, look at the charts, and just read through them, give their analysis. And obviously, they do teach, how to tape read. And it took me personally some time, Bruce, to get to the level in my tape reading and chart reading where I felt like comfortable, going and explaining, some of the essential concepts of the tape reading. So we're going to start with the basics in the series number one. By the way, that's going to start on Thursday, October 8th. If you're a little bit late, no worries. Just sign up and you could just, catch up with us. We're going to start with the basics. Then we're going to have a bonus session with Gary Fullett. Gary Fullett wants to talk about tape reading without time frame constraints. I highly suspect that he's going to talk about the PNF and volume signature. Then in series number two, I'm going to be joined by David Weis, and David is obviously an authority in tape reading and chart reading, and what a wealth of material David is going to bring, to the table. And it's a very rare appearance by David, so we're extremely excited about that. And then we're introducing the new persona to our Wyckoff Analytics, Wyckoff Nation community, William Reardon. He resides in the UK, and his specialty is tape reading of the S&P E-mini futures on the intraday and swing time frame, and also other futures as well. What's going to be interesting during those sessions is that together with David and William, I'm going to be conducting, an exercise where I'm going to be a student, and they will show me the chart that I'm not going to see before. I will not know what this is, and they will, I will have to read the chart and tape read the chart right in front of you and give you my explanation, as to what I'm thinking is happening on the chart right now. And they obviously will be given their feedback as well. And Bruce and we thought that what a great maybe introduction to this whole series is just to do exactly that. And Bruce, I believe you have a chart for me, which
We're
I
going to
will be,
follow that format today.
yeah. So let's
And
just
so,
see how am I going to do.
well, let's get started because I taught tape reading at Golden Gate University with Hank for, wow, almost 30 years. And we taught these principles in the classroom. And it's my honest opinion that Ramon is I think, the best educator on tape reading alive today. And so this is what I think is a real opportunity. And I'm so glad we get to do this today. So let's get to it. And I'm going to stop the recording so that we can change screens because we're going to let Ramon be in charge of the screen here. So hold on. I have selected a stock for Ramon to evaluate. And this actually is a historic chart of Decker's, and it begins in 2003. Ramon, take it away.
All right. Well, Bruce, thank you so much. So, in the goal of this exercise is obviously, just to go through the concepts of tape reading, chart reading, Wyckoff price structural reading as well, and to show you the analysis as it unfolds. I do not know exactly what's going to come for this particular stock. Bruce knows the stock a little bit better than me, just because he campaigned it. He made a lot of case studies on this. So I have no idea what's going to come after next bar. So we're going to, and also I'm going to try to go really fast. So for those of you who really would like, to think about the logic of what being said, stop the recording and then, just replay what has been said. So we're starting with the overall chart reading where we look at the longest history possible for the stock that we could find. IPO pricing, we're in the clearly defined downtrend. Going into the low of 98, we see a climactic move down into the extremely and deeply oversold condition. We see some buying based on the value, and that brings us to the new value zone. I would say that this bar right here defines the stop in action and creates, together with this low right here, the trading range, which definitely is an accumulation with a couple of spots where there was an initial buying, but was stopped by the emergent supply. Phase C is very clearly being seen here. Last point of support, sign of strength, backing up action. Please note how the backing up action is very shallow, so shows a lot of strength. And then the whole dynamic move up from about 80 cents to almost $5 here. So that is a very, very big move for the stock. And two assumptions here that right away we could make. First of all, that the long-term bias for us is going to be bullish. So we will be looking for situations where we are going to have maybe some kind of trading ranges that are going to become reaccumulation trading ranges. We're going to be trying to time those according, to the Wyckoff methodology, finding phase C, and then continuation up. So we want to capture possibly the next move down. But before that happens, just because we're seeing even on the weekly a little bit of the climactic action, this big spread expansion, climactic run, we might be in the later part of the first swing up. So we would be expecting maybe a change of behavior that could potentially happen. For us to observe that, we're gonna go to the daily chart. So, and let me just make sure that we are there. Okay, so now I'm gonna expand the view of the latest price action. All right, yeah, and it looks like we're at the beginning of this climactic run. We see that previously, whenever we had the volume signature expanding like this and being, so climactic, we had stopping action and we went into some kind of trading range. So we're probably at the end, there are really not a lot of big trades here, maybe with an exception of some small, very like 1-2 days type of swing trades. This is not very attractive to me personally, so I wouldn't be doing anything here. So I'm going to be going a little bit fast here. Let me just, again, increase the size. And as you could see, the darker at that point of time is a small cap, very illiquid stock. You could see this in the texture of the price and the volume signature. There are a lot of like those tails, you know, there are smaller spreads, there are some gaps. So you have to take this into the account when you trade stocks like this. So here is probably our climactic action, you know, the climactic run itself, where the volume signature expands. There is a gap, you know, there is some supply that's coming on the last bar. Would be expecting either here or maybe a little bit further down the road that we're going to stop somewhere here. Okay, so this bar is very interesting. Why? Because we are seeing how for the first time there is a change in behavior. There is a change in the way how this bar looks. Well, first of all, this is the highest supply bar that we have seen since, well, we don't see that type of volume signature on the way up, but that type of spread we've seen before, but we've seen it on the climactic run down. So that just tells us that supply is coming in aggressively. We see it both from the volume signature on the way up and on the way down now. There's some kind of synchronicity, you know, with which the price goes down. So we're somewhere either experienced the top already or somewhere close to the top. I would say that probably we're already there. And now I would be expecting some kind of change of behavior that would probably take us, you know, to this level here, you know, as a support level. So let's just see whether we're gonna, you know, still have an attempt to go up or develop some kind of change of behavior. And here is the reaction that starts to develop just under its own weight of poor demand, which we observed in the last 2 weeks. So there is no follow through to the upside after the supply comes in. That weights on the price structure and suggests, you know, some kind of reaction. So we just need to see, could we develop a more meaningful reaction here or not? And this is in a liquid stock, so we might be incorrect here on the change of behavior. This could be just a smaller trading range and an attempt to continue to move up. It could act here as a spring. So again, not necessarily going to be the stock that I would prefer to participate. Not enough causality for me here to participate. So I'll be just on the sidelines, you know, analyzing the stock and trying to see what kind of scenario is going to work better. A very interesting bar, attempt to go up. We're closing at the previous bar close. Again, let me just expand it a little bit. That is suggestive that some demand is coming in, but the result is not extremely good. There is a little bit of the testing here of the previous low. So let's just see maybe, you know, if we could recover from here. Again, not necessarily, you know, my type of trade. And it looks like it does act, you know, as a spring in this area. So there is some strength. There is a coming back. So some demand here, some demand here. At this point, we could expect that whatever supply has come here, that stopped the price from moving up, went into the trading range. And the next level for us to overcome is going to be this high. So let's just see if we could still push up, you know, through the resistance. Okay, and we do exactly that. So that was just a temporary stop in action. Again, not necessarily my type of trade. I would be looking for more of the campaign trade or a much larger swing trade. Supply comes in a little bit more, but the close here is still at the level of the resistance. So there could be absorption at this level. But if the price is going to start coming back below 4.8, we might have a reaction here after the upthrust. Okay, so here is that fall. below that last commitment to the upside. The close is still somewhat favorable, but there is no follow through to the upside. So we might develop a much more meaningful reaction at this point. Okay, still in the trading range. So now I would be thinking that we are staying here in this range, at least for some time. Let's just see if we could recover above this level, and then we could start labeling it. So phase A, phase B, could this be a potential phase C? This is where, the supply signature starts to go down. So could we recover from this? And this is a possible trade here. But again, the causality is just not enough for my taste. I probably would be looking for something like this, to produce this type of move, where we have a more substantial cause. But that's how the stock is moving, and this is what we have for us. Um, Probably, maybe a short-term trade here, and I'm just kind of thinking, okay, we could potentially tactically just have a trade that could originate as a stop buy here, with the stop loss just below the structure or more aggressively here, and just see if it's going to take us in and if it's going to, expand a little bit more. So let's just see what's going to happen. Let's just have that kind of stop buy ready for us. Okay, so that would get us in, but I don't necessarily like this bar. Why? Because it happens at the line of the resistance. So we're in this resistance cluster, and look how supply is coming in. So it's the diminished spread shows, so that supply is available. So now the question here is all about testing. Could we actually, absorb the supply at this level and start advancing even more? So let's just see what happens. Okay, and obviously, supply has been absorbed. So at this point, we would be already in this position just based on the stop buy that we had at this point. My preference is always to have conservative stop losses first, just to allow the price to, to get away from our position first. Some supply is coming in. We see that in the expansion of the volume signature, but this is the highest close. This is the close above, all of the previous closes. So whatever supply came, actually that is being absorbed. And just overall, because this is in a liquid stock, we also have to think a little bit about this. We see how institutions are starting to participate more. So something is changing in their behavior, and they are trying to get into this position. And what's interesting is that they are getting on the way up. So it's almost like accumulation happens on the way up. So sometimes, this type of volume signatures are going to be just reflective of a change of environment, which could be temporary. Also, don't forget, even though we're in the longer term uptrend, we have to think what's happening on the weekly basis as well. We have to think about, that this could be just a short-term swing trade. So let's just see how it's going to continue at this point. Okay, so far so good. But again, diminishing spread characteristics on expanding volume that suggests that some selling is there and it just pushes the price down while demand is trying to push the price up. So there is a contraction of the spread. Okay, so this is a very interesting bar. A lot of volume signature. So whenever we have a volume spike in general, we would be thinking that there is an expansion of both demand and supply. And with the expansion of such supply, again, we would be thinking stop in action, reversal, change of behavior, any type of trading ranges. So we should be on the lookout for that. At this point, I'm not going to do anything with the stop loss. I want to see what kind of reaction we're going to have here. Are we going to stop here at this point? Are we going to consolidate, react up? And once we react up, then we could move the stop loss somewhere here. But if we are just going to stop here and then come back into the trading range in a more meaningful reaction, that would probably suggests that we are done with the whole move and we are in a more meaningful consolidation. So let's see what happens next. Not a bad test. The price actually holds at that level, but we're also not showing any progression to the upside, so we need more data. Okay, so supply came in, tried to go down, not necessarily rallied from this place. So, we're seeing the emergence of the supply. And please note that even though it seems like the volume diminished, but it's still relatively high to what we've seen here. So, at the minimum, that's just a, small pause that we could anticipate here. I would be maybe even thinking of moving the stop loss a little bit closer, maybe to break-even point, just to make sure that we're not being caught up in the last move to the upside before a more meaningful change of behavior. Okay, still up. So whatever supply came, the stock was able to absorb that supply. So at this point, as we're trying to make the new high, I would move the stop loss to a slightly higher level, probably below this breakout bar, because this is where demand has come. So somewhere here into the middle of the trading range. Because if the price is going to come back and go back into the trading range, this trade is out. We're going to be done. There is somewhat of a smaller supply signature that we see, but we still need to clear this area in a more meaningful way. All right, and now even more volume comes, even more supply comes. And again, we see by the close that it's not really influencing the price as much, but look at the spread. It's definitely one of the largest spreads lately. So that definitely, puts some cautionary note on all of the price action for us. Okay, and here is the resolution of that supply. Still, supply signature is high. Again, we would be comparing that supply signature to everything what came before. And we also want to see how the price, reacts to that increased effort signature. And we've had quite a few just recently. So look at here, look at here. So those are all bars that are populated with supply. Even this one right here, it has all of the supply characteristics. So I wonder if we're going to go into a trading range, or if we're going to stop here, or maybe produce even more meaningful reaction. Okay, so price goes down but recovers, and it recovers on smaller volume signatures. So still not that damaging, but at the same time, if we're going to go below the low of this bar, imagine that the next bar is going to be down. That probably would suggest that we are stopping here again like we did here. So my preference would be probably to break the whole position into two parts, maybe one half and another one half, or maybe sometimes I would do 1/3, 1/3, and 1/3, and place the stop loss for one unit here. Place another stop loss maybe below this level right here, and maybe below this level. So these are kind of like, if I'm scaling out of this position, and we thought that this is going to be a very quick swing trade here. If that happens, at least I'm going to be profitable on all of them, and then some of them are going to be more profitable than others. So we'll just have
One
to
of the
see.
things that I think is so rich about your whole approach here is the tactical aspect, where you're talking about where to set stops and where to enter, where to set stops uh, on a trailing basis, so that you're locking in profits. And anyway, I just think that's a very
Mhm.
rich part of this uh, workshop.
Well, we definitely don't want to give up any profit, and this is a peculiar spot because the price has been going up for some time, and the volume exhibits, characteristics where there is some selling. So let's just see what's going to unfold. I mean, like, we don't necessarily want to predict, and here is that, kind of like beauty of not predicting what's going to happen, but just like allowing the market to dictate what you're gonna do. So it didn't go down, even though supply has occurred. So we're instantly thinking maybe absorption has happened and we could have higher prices. Could we overcome 7 here? And we will be moving the stop losses along the way. So let's just see what's going on. Okay, so here is a bar that is very interesting because it happens with the gap, that's number one. It happens on the relatively high volume signature, number two. And as effort increases, we have the downward result also increasing. So there is a synchronicity between the effort and the emergence of the supply and also the way how the price behaves. So I think that maybe our 1 unit could be like in jeopardy here. So we probably either out or just, almost there. So let's just see if it's going to take us out completely. Yeah, definitely out from the first unit. Okay, and we still, the other 2 units are still in this position. So there is no follow through to the downside. So we still could have a continuation of this pattern. Okay, so here's a breakout. Somebody's buying, a lot of shares now. And again, this is a very interesting case just because of the illiquidity of the stock at the time and how institutions are coming in into this position. Again, this is more of the accumulation on the way up where supply occurs, there is some profit taken, and yet other institutions come in, and establish new positions. So an ability to stay in this position despite of the volume signatures and supply occurring, that's going to be the goal. So here we're still in 2 units in, and we are continue to hold that. Supply comes in at the level of the resistance. Let's just see what kind of test we're going to have. Okay, so no follow through.
2 more minutes left.
No follow through to the downside. Okay, and still would be holding this. There is less supply on this bar just because the volume signature has diminished. So we are still going to assume that there is an absorption there. Okay, some supply is coming in, but still within the body of the previous bar, so still bullish. Can we overcome that? A little bit of a pause here. So we're not making the progress on the previous 2 bars, and therefore this gap. So I would be thinking at this point that maybe we're in some kind of formation right here. Maybe a retest of this low is possible. So with our stop losses here and here, I think we are somewhat protected here to a certain degree, but definitely there is no progression to the upside. Demand is starting to diminish. We could have a more meaningful reaction right here. So I'm gonna skip a little bit to to the right just to get more information as our session is coming to an end. So here's this reaction that is unfolding. Please note how the volume signature increases, and we're probably going to retest 550 or 525. Okay, so price holds at around 550. Let's just see if we could recover into 625, 650. That should give us, an understanding of whether we should hold on to this position or not, in which we would. Probably would be thinking here, even considering, additional units to buy, maybe slightly above 660, 675. Okay, so that comes, but we definitely have, again, the volume spike into the resistance. So the question here is, did absorption happen at this level or not? So we would be in 3 units right now at this point of time. And Bruce, I know that we don't have time, so let me just quickly go.
Sure.
Okay, supply comes in. And let's just kind of stop here. I think this is a good segment just, to go through this. What are your thoughts here on
Oh
this?
my gosh, Roman, you traded it so well, and you really showed how you can be a tape reader and use a very valuable trend following technique to get you in, keep you in, and profit from this ongoing uptrend. I did not give you an easy case study. Roman, thank you so much for being here. Have a great workshop.